This video covers Learning Objective 2, Part 2, Apply and Compare Various Inventory Costing Methods, Average Cost, in Chapter 6, Inventory and Cost of Goods Sold. So let's get started. In this video, we are covering the average cost method, which is one of the four major inventory cost methods. The average cost method, sometimes called the weighted average method, is based on the average cost of inventory during the period. The formulas we will use are listed on the slide. The formulas are average cost per unit is equal to cost of goods available for sale divided by the number of units available. Ending inventory is equal to average cost per unit times the number of units in ending inventory. Cost of goods sold is equal to average cost per unit times the number of units sold. Now let's go through an example using the average cost method. In May, Shade Company had a beginning inventory of 30 pairs of sunglasses that cost $10 each for a total cost of $300, 30 times $10. During the month, Shade purchased another 20 pairs at a cost of $15 each for a total cost of $300, 20 times $15. At the end of the month, Shade has 10 pairs of sunglasses left in ending inventory, having sold 40 pairs during the month. Calculate Shade's cost of ending inventory and its cost of goods sold for May. Let's just make note of the key information that we will be using. First, note the beginning inventory of 30 pairs of sunglasses that cost $10 each for a total cost of $300. Next, we see the purchases are $300, which is 20 pairs at a cost of $15 each. Ending inventory consisted of 10 pairs of sunglasses. We don't know the cost of that ending inventory. That is why we have to go through the calculations. Also note that 40 pairs of sunglasses were sold during the month. Let's get into the calculations for our average cost example. Beginning inventory is $300 or 30 units times $10. We will add purchases. Purchases are $300, which was 20 units at $15 each. Once we add beginning inventory plus purchases, we get cost of goods available, which is $600. We also know that there were 50 units available, which was 30 units in beginning inventory plus 20 units purchased. Okay, now we can subtract ending inventory, but before we can do that, we need to calculate the average cost per unit. The average cost per unit is the cost of goods available for sale divided by the number of units available. Here we will have $600 divided by 50 units to give us an average cost per unit of $12. So let's go back up to the ending inventory then. Ending inventory has 10 units in it. We will multiply that by the $12 per unit average cost to get $120 as our cost of ending inventory. We can calculate the cost of goods sold two ways. One way is to take the cost of goods available and subtract ending inventory of $120 to arrive at cost of goods sold. We can also take the 40 units that were sold and multiply by the $12 average cost to get the $480. So that concludes our example of the average cost method. Now we have a few knowledge check questions coming up to test your understanding of this material. After I read the question, pause the video and try to answer it. Once you restart the video, I will be walking through the answer for the question. Let's go. The first question reads, Roar Company has the following data for June. Beginning inventory, 10 units at $12 each equals $120. Purchases in June, 5 units at $15 each equal to $75. Ending inventory is 7 units and 8 units were sold during June. What is the average cost per unit? The choices are $12, $13, $13.50, or $15. The answer is $13. We get the answer of $13 per unit by first calculating the total cost of goods available for sale. We take the beginning inventory of $120 and add the purchases of $75 to get total cost of goods available for sale of $195. We divide the $195 by the total units that were available, which were 15. The 15 comes from adding the beginning inventory units of 10 plus the purchase units of 5. The second question reads, Rohr Company has the following data for June. Beginning inventory 10 units at $12 each equals $120. Purchases in June 5 units at $15 each equals $75. Ending inventory is 7 units and 8 units were sold during June. What is the cost of ending inventory using the average cost method? The choices are $75, $91, $104, or $120. The answer is $91. The first thing we need to remember for this question is that the average cost per unit is $13. Where did I get the $13? It came from question 1. In this question, we are looking for the cost of ending inventory. We are told that ending inventory is 7 units. We can take the $13 average cost in question 1 and multiply by the 7 units in ending inventory to get the answer of $91 in this question. The third question reads, Rohr Company has the following data for June. Beginning inventory 10 units at $12 each, $120. Purchases in June 5 units at $15 each equals $75. Ending inventory is 7 units and 8 units were sold during June. What is the cost of goods sold using the average cost method? The choices are $75, $91, $104, or $120. The answer is $104. Again, remember that we are using an average cost of $13 per unit for this question. That $13 came from question 1. There are 8 units sold during June, so we can take the $13 average cost times the 8 units to get the final answer of $104 for our cost of goods sold. That concludes our review of apply and compare various inventory costing methods, the average cost inventory cost method. Thanks for watching.